Seattle apartment completions in 2016 roughly doubled the metro's long-term norm. What happens when deliveries climb another 20% or so in 2017? We'll take a look at expectations for Seattle's multifamily sector on today's Apartment Market Dynamics from MPF Research. I'm Greg Willett.
And I'm Cameron McIntosh. Digging into those Seattle apartment construction stats, new supply in 2016 jumped to 12,128 units. That total increased 20% from 2015's delivery volume of approximately 10,000 units. And that 2015 tally already was way above the norm of about 6,000 units finished annually over the course of the past couple of decades.
A bunch of new supply isn't a problem as long as demand keeps pace with completions. That's the situation we've seen in Seattle so far in this economic cycle. Demand in 2016 came in at a level that's virtually identical to the delivery volume. Absorption reached 12,030 units in the calendar year. Occupancy then remains in great shape. The year-end 2016 figure is 96.6%. Even the Class A stock is essentially full despite the presence of so many properties moving through that initial lease-up process.
We're still waiting for all the completions to have much of an impact on the Metro's big picture pricing power. Effective rents for new leases climbed 7.8% in 2016, with growth coming in at roughly 6 to 9% across every product segment. Digging down into neighborhood-level data does show a couple of spots with more moderate rent growth. Annual price increases are at 3% to 4% in West Bellevue and the University District, two of the spots where building is heavy.
Cameron, I've seen several news reports that make a big deal out of the fact that Seattle rents dropped on a monthly or quarterly basis right at the end of the year. Our stats show a 1% decline for the quarter, with cuts in the range of 3 to 5% showing up in a handful of neighborhoods. Those results are a little bit concerning, mainly because of the size of the pricing drops in the key downtown and West Bellevue submarkets. However, there is some pretty pronounced seasonality to Seattle's rent performance. Minor backtracking during Q4 is normal. The pattern is registered year after year after year.
There's still a lot of construction happening in Seattle's apartment sector. Ongoing building stands at 20,725 units. Properties scheduled to finish in 2017 total 15,080 units. These projects will boost annual deliveries another 24% from the past year's count if everything makes it across the finish line on time.
With that further increase in new supply, we think some slowdown in Seattle's momentum begins to show broadly. Occupancy is expected to drop about 130 basis points. We're anticipating occupancy declines near 300 basis points in select neighborhoods.
Expected rent growth is near the 6% mark in 2017. While that's off from the results seen right now, it's still one of the best performances projected for any metro across the country.
This is a place where owner and operator sentiment could significantly play a role in where rent growth ends up. It's certainly possible that more substantial adjustments to pricing positions could be on the way in a leasing environment that grows a little bit more competitive. But Seattle operators have a super track record for making fact-based decisions rather than letting emotion overwhelm them.
This one sure continues to look good, even if expected future results don't quite live up to recent stats. We'll wrap up on that note. I'm Cameron McIntosh, he's Greg Willett, and thank you for watching Apartment Market Dynamics from MPF Research.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.